Hello and welcome to another episode of the Investing with IBD Podcast. It's Justin Nielsen here, your host, and we are coming to you live at 5 p.m. Eastern, as we typically do on our Wednesdays. Today is August 27th, 2025. So happy to have you, and it's NVIDIA earnings. We've had quite a week with the big Friday reaction after Jackson Hole, and there's certainly also something that we've been looking at a little bit more recently for this year is a little bit of a spike up in the IPO activity. And to help us kind of learn a lot about how to get into IPOs is Kathy Donnelly. She is, of course, the author of the Lifecycle Trade. We've had a number of her co-authors on the show, including Eve Bobach, Eric Kroll. We haven't had Kurt on, but we can do that eventually. But welcome back to the show, Kathy.
Thanks, Justin. It's great to be here. Hello, everybody. I'm
Yeah.
excited to talk about IPOs.
And I should also mention that she is also a prop trader, so she's doing her own thing. That's how she makes her money, and also she does some coaching on the side. So that's something that is a little bit newer for her. But and then we could also talk about all your Ironman, triathlons that you do. But let's get into the investing part, and maybe we'll save that for the after show. So Kathy, let's just start out with kind of the basic guidelines. What got you attracted to IPOs? What made you want to study those in particular? Because a lot of times, I mean, look, there's so many of them that just don't do anything, right? There's so many that just never really catch on or anything like that. So, what made you decide to try and learn a lot more about the IPOs?
Well, that is true, Justin. There are a lot of IPOs that don't amount to much of anything. But, as investors, IPOs are glamorous and exciting when they do work. So it's worth studying. CoreWeave, which we'll talk about a little bit later, is one of my biggest wins this year. And it was a lot of fun, and I liked the gains that I achieved. So why not study them, right? And
Hmm.
why not try to get better at it? But really, the for our book, the Life Cycle Trade, I have to really shout out to Eve Bobach because it was her idea to study IPOs in the first place, and then she asked me if I wanted to participate, and then we asked Eric, and then Kurt, and then this is kind of how it happened. This is the short story version, and we did the research, and then once we showed the research to some friends, then Eve was like, "Hey, I want to write a book," and I was like, "Oh, you do?"
What? That's pretty good that you had like that same deer in the headlights look that you probably had at the time she asked. So
Right,
well done
exactly.
recreating the moment, Kathy.
Well, it's funny. Eve and I we met at the Naperville meetup way back in the day when they had that meetup. And we went to a level four together. It was the first level four we traveled to, the level four being the original master class that used to be held in California with William O'Neill, the 2 day event. And we had just really were getting to know each other, but we went to level four together and we were just having a night, an evening, having drinks. And I just was like, "Oh, is there anything you want to, do like a dream or something?" And one of those late night talking about the future kind of thing, random thoughts. And she's like, "Oh, I always like to write a book." And who
Mm-hmm.
knew
Yep. There.
I'd
There
get
we go.
roped into that dream years later.
Make my dream a reality.
Yeah.
Well, you know what? You were kind enough to prepare some slides for us. Thank you for that prep work that you did. And so maybe we could go through some of these because again, it's very rules based as a lot of the stuff that we do, and I think that's something that we certainly appreciate here is when you don't just go off the, oh, wouldn't it be great if I could catch, XYZ stock. Well, I can't use XYZ stock now because that's a symbol, but such and such stock. If I could catch it at $10 when it IPOs and see it, go to 100 or split a number of times and all of that. So, but at the end of the day, again, recognizing the odds, you have to be able to sort out the winners from the losers. So, what is your kind of criteria for finding the ones that work?
Thanks, Justin. Well, I wanted to start with that quote: "Chance favors the prepared mind," or "luck happens, when you're prepared and the opportunity presents itself." There's all different versions of that quote. And this is no different. I feel like investing the way that we learned from William O'Neill and how to make money in stocks is doing the research, studying the charts, and being prepared.
Hmm.
And so what I'm sharing today is exactly what I did when I prepared for that core weave trade. I already had an electronic rare jewel chart book created. And just quickly, for those that don't know, rare jewel is something that we studied. We talk about it more in our book, The Lifecycle Trade. But it's when an IPO goes up at least 100% from its day one close within the first 90 days.
Hmm.
And what we found in all the statistics that we ran was that if that happens, it has a twice as likely to gain 500% or more in its lifetime.
Hmm.
So you asked me earlier why study IPOs. Well, once we found this out, we're like, okay, well, rare jewels are definitely worth looking for.
That's an incentive.
That's an incentive.
Right.
So I would like to encourage people to consider creating an electronic rare jewel chart book or just any chart book of top stocks. It doesn't have to be recent IPOs. I mean, really, you should categorize them. Consider categorizing them. I have a PowerPoint that has like my IPO advanced phase. That's one of the phases we talk about in the book, which can contain that rare jewel, but it can also contain uh, high flying IPOs that maybe didn't have 100% in the first 90 days, like Reddit or ALAB.
Hmm.
And then have another category, another chart book of your successful institutional advance phase, after it's had that pop and then it's gone into that due diligence phase where it hasn't really done anything for a while. And then it has its next big run. And some examples of that would be Palantir and Twilio, which we're going to look at. And then so that way, whatever stage you're in and you see a stock that's presenting itself that could be like one of those, you can go back and reference them and know what they look like. As a trader, I've never really created programs. I don't run things to tell me when it's time to do this or that. I really like to use my eyes and study the chart and have it jump out at me so that I can recognize it, have that experience, and know what I'm looking for. So when CoreWeave came out, I was like, okay, I need to be prepared. So I pulled up that Rare Jewel IPO Advanced Phase book, and we're going to look at some of those today.
Hmm.
And what I look for is what are the signals? What is the chart pattern? And I look at it on the daily chart and the weekly chart because they're different. They're not the same. And I know people love their daily charts,
Right. Hmm.
but I think the weekly has just as much credibility, and
Hmm.
I want to impart that on others for the buying and the selling.
Hmm. And when you talk about the daily and weekly chart, one of the things that you also are looking for are kind of these signals, right, that are happening on both, and you're looking at different time frames. So I guess before we get to that, like, how do you first decide what to put in that electronic chart book? And I love the fact that you use a PowerPoint because it's easy and it's you can kind of keep it all in one place. You can take notes and the speaker notes, all of that. But how do you decide what goes in there?
Well, it's pretty easy. When you've been around for a little while, like myself, I put in there stocks that I've traded or stocks that I've missed that I wish I would have traded. So like Palantir, I traded, so it's in there. eBay's in there. I did not trade eBay. I actually really wasn't trading actively back then, but through the research that we did through our book, eBay's in there. An interesting one that we're going to look at, which I haven't thought about for years, but Corsair's in there. Believe it or not, Corsair was a rare jewel. Twilio. I did not trade Twilio's IPO advance phase, but I knew people that did, and I was like, oh, that's one I missed. I'm going to put that in there so I don't miss it again. So really, it's just about doing the homework, doing the research, looking at some of those greatest opportunities, even that the articles that William O'Neill did that you guys are reposting, and just putting all the great stocks in there. And so that's how I decide. And I'm always looking and keeping track of that 90 days of any new IPO that's coming up so that if I missed it, I know to keep my eye on it.
Hmm. And are you looking for a certain percent gain, or is it just a simple matter of, gosh, I wish I had this one, or or I did make a lot of money on this one, and it goes in?
I mean, I am really good about doing my post analysis. So almost every stock that I trade goes in there. And even stocks where maybe it didn't have a great run, but it had a pattern that I saw that I start seeing and I recognize it. Like I'll even put those in there, like, regains of the 10-week moving average. Like, what do I want those to look like? And what
Hmm.
does the volume look like? Or even 3 weeks tights or railroad tracks. I categorize a lot of things. And in fact, sometimes I'm just on my iPad and I'll snapshot it and then I'll just put, now that you can put the metadata in the picture, I'll put
Hmm.
railroad tracks. And then I can search the pictures of the charts on my iPad and pull up all the railroad tracks that I've seen. And again, just being familiar what they look like and like what happens after. Sometimes, the railroad tracks, we've talked about it, sometimes they'll still go up a little bit before
Yeah.
they come back down, or maybe even not at all. In general, though, I feel like the railroad tracks always are signals to the downside, but it's just a
And for
matter
those that
of,
aren't aware, railroad tracks are a
oh
sell
yeah,
signal that
sorry.
Bill O'Neill, he has that in his book, How to Make Money in Stocks. You can look at the fourth edition, the orange book, and it's not just a way to tell if you're a human or not. Like choose all the railroad tracks, whatever. So, but okay, let's get back to the signal, because again, you're looking at a daily and weekly chart as you mentioned, and what signals are you looking for? To because you have all these different time periods after 10 days, 21 days,
Hmm.
50 days. What is it that you're looking for here?
Okay, well, for a really strong stock, it like core weave, when we'll look at it, it didn't even break the 10-day moving average until after it was already up a couple
Hmm.
100%. Some will touch once and then keep going. Kind of like there's another rule too. I'll just, people may or may not be familiar of it from some of the workshops that I learned, where the first touch of the 10-week moving average after a breakout is usually okay, a good buy point. But then once you have your second and your third, they get less reliable. And I've noticed with these IPOs, you can also apply that to the shorter term moving average. So after 10 days, it may or may not touch the line, and then it keeps going, and then maybe the second or third it doesn't. But then you have the first touch of the 21 day, and then usually it'll bounce if it's a
Hmm.
strong stock, and then the next one maybe it gets weaker, and so on and so forth. So 50 days, 10 weeks, you generally see that, you can see that in IPOs even in the short runs as well. Does that make
Hmm.
sense?
Yeah, yeah, yeah. And so again, you're using because again, after 10 days, after 21 days, are these the moving average lines that you use as well to kind of you said support at the 10-day, or maybe support at the first 10-week touch. So
Right,
is this kind of
exactly.
your guide?
I'm looking for the chart. I'm looking for when the 10-day first appears on the chart, and then when the 21 starts to present itself, 50 days, and usually the 10-week.
Hmm.
So the 10-week obviously is the longest one. So that has to be for a really successful IPO like CoreWeave, that's going to be around that long. Some of them
Hmm.
aren't going to be around that long, but you can see a lot just from the 10 and the 21 day. So in that case, you really do have to focus on the daily chart when it's that early in the run.
Hmm.
But the weekly chart will still give you signals in the bars that we're going to look at as well.
Hmm. And you say here after a 100% gain. So if you're lucky enough to have that kind of gain, or again, you're looking for a precedent so you can hopefully get that kind of gain, what is it that you're looking for after that?
Yeah, so we're really going to have to look at the chart,
Okay.
because I'm going to be able to explain it better once we look at it of what
Okay,
I'm
we'll
looking
save that
for.
part for
Yeah, let's
next.
let's save that, because I can talk in generalities, but I think it's going to be better when we look at the chart. But this is just the guidelines so that people can have that in their eye when they're looking at it on their own, and then really see how it reacts and responds to all those different moving averages that pop up after 10 days, 21, 50, etc.
Perfect. And then the final point is the post analysis, as you
The
said.
final point is the
You love
post
it.
analysis. Yes, I mean, I am such a strong believer in post analysis. That's the only reason why I'm a successful trader, is because, and I worked corporate. I was able to retire from corporate. I'm just strictly investing now, living off, and still increasing my net worth as best as I can. But it's all because of post analysis. I studied what I did wrong, and I figured out how I could do it better.
Hmm.
And I never even used to be able to trade a stock like CoreWeave. There would be no way. like 10 years ago. But now with all the knowledge that I've gained and just the fact that I love it so much that I just really just get into the study of it, I've been able to tweak rules and continually improve. I mean, we're never going to be perfect, but we can always look to improve. So even if you didn't trade the stock, you can still do a pseudo analysis on it. Well, if I had traded it, how would have I traded
Right.
it? And then what
Hmm.
kind of gains would that have gotten for you? And then how could you tweak that? And write it down. Write it down on a piece of paper, put it in the PowerPoint, and then again, when that stock, a similar one comes that looks like that one, go back and review so that you're prepared and remember, because we don't remember everything. Remember what to look for.
Hmm. And that's such a good point because a lot of people don't realize this. Of course, you were at the master's programs with the founder of Investors Business Daily, William O'Neill, and he would do this in the model books too. And in fact, we have his old Wednesday column that we did like 10 years ago or over 10 years ago, and he would mark these up, and it
Mm-hmm.
wasn't how he traded it necessarily. It was kind of like, oh, these are the signals, these are the rules that I could have used to maximize and optimize how to trade this. And so it's always kind of looking for that ideal, and then trying to get as close to the ideal as possible, knowing that you're never going to sell at the top and you're never going to buy at the bottom, but how much money there is, in between there.
Exactly.
Hmm. And then just a few things to go over before we get to the charts on the sell rules. You break it down into offensive and defensive.
Yes, because it's important to take gains on the way up. And I actually used to be a strictly defensive seller, but especially with an IPO that can move up a lot in a short amount of time, it's really great to be offensive. Minimize that drawdown. It's not a long term hold. So, again, the chart signals, I know you've been asking me about that, but we're going to look at the chart and then I'll really be able to point them out a lot better. But I'm
Hmm.
looking for, and I'm going to show you specifically one on the weekly chart that I like based on some of these examples. But using those, consider those short-term moving averages. Like maybe, a break of the 10-day moving average is where you decide to take some off. And depending
Hmm.
on how much cushion you have before that first break, you consider a percentage to take off. But again, this would all be based off of the precedents and what you've seen done on a previous stock to make those decisions. It's
Hmm.
an educated guess based on a previous high flyer, and then you tweak it over time because IPOs come in all shapes and sizes, and none of them are going to be exactly the same, but they'll be similar, and then you can glean tips and tricks from all of them to make the next one even better. But on the defensive side, I really like to stress the mental capital preservation. We talk about this in the book. It's a way to always know how much gains you're retaining so that mentally, at least for me, it's like, oh, well, if I'm always retaining 50% of my gains, I'm always making money. So I will give it more room. And because I took gains on the way up, then it's okay for me to give back more on the way down in anticipation of potentially a continued run.
Hmm.
And so that's simply just taking your buy price plus, I'm sorry, the difference between the highest price you've achieved since you've owned the stock minus your buy price, multiply that by the retention of gains you want to retain. So for me, it'd be multiplying by 50% and then just adding that to my buy price. And that gives me the stop price that I would sell at to retain that gain. And the reason why I like 50 is because if you do have 150% gain, actually, you can pull back 30% on a stock, potentially a normal base pullback and still
Yeah,
be
that's
holding
very
it.
normal.
Yeah,
30%,
right. Very
if you're going to
normal.
hold something for a long time and hold through a base, you got to expect, you know,
Exactly. And then
that
if you're
that amount.
lucky enough to get 300% or more, which I have in some of my stocks, then you can actually hold it up to maybe even 40% and still retain 50% of your gains. So that's why 50 is such a great number. Like when you look at the chart, and we have a chart in our book, but we've also talked about it in other podcasts and lives and stuff. You'll see, and so it's a great number to use. And
Hmm.
then also the declining 10-week moving average, and you and I talked about this on Monday. I No matter how many times I think, okay, maybe this one will actually keep going, it doesn't. On
Right.
that IPO advance phase, that first big IPO run, it always, when it starts to roll over and the stock meets it, The run is pretty much done for a while.
Yeah.
So that's a great defensive rule too if you didn't want to use mental capitalization or maybe use them in concert with each other. But that's a good way to protect your remaining gains if you, even if, well, if you were selling on the way up.
And I have to say, this is one of the things that's important about, again, having that kind of chart book of the rare jewels is because when you see that happen so often, right? You have in the back of your mind like, oh, this could be this kind of gain, and you're thinking of the lifetime of it, but you got to remember that a lot of times there is that long period where nothing happens, and do you want your money tied up in something that is not going anywhere for a year
Right.
when there's all sorts of other places it could be. So a
I've
very
yet to find a reason to hold an IPO through the IPO advance phase, through the due diligence phase, through the institutional advance phase. Like that has never happened for me, and I don't think it ever will. But I have played successfully the IPO advance phase and then the subsequent institutional advance phase after that due diligence phase. And if you can do both of those, then I think you're in a great place.
well. I am going to go to market surge. We're going to go ahead and shift gears here, and you promised we were going to look at some charts, so let's look at some charts. Do you want to start with eBay, or is there another one you want to start with?
No, sure. Let's go to eBay and
Hmm.
let's go to the weekly and
Okay.
1998.
So
Back in 1998,
um,
long time
so
ago.
where do you want me to change the date to one of these particular weeks?
Well, first let's just look at this, just what you have up here. So
Hmm.
that let's see. Let me go ahead and put my glasses on.
Happens to the best of us.
Yes, yes. Okay, so what did you do? Did you? Oh, you changed it to.
I just wanted to make sure that it was on standard, but I can change it to best fit if you need me
Well,
to.
let's just put on best fit just for. Oh no,
Just for
actually
a
that's
moment.
fine. No, that's fine. That's
Yeah,
fine.
I think we've got it all in there, but there
Yeah.
is this lower part that's not on there.
Right.
So
Well, I'm not going to spend a whole lot of time on the buying and this IPO base, that V shape, because Eve, we got to give another shout out to Eve Bobach because she was on IBD Live and you guys did a special clip on her core weave trade, and she really focused a lot on that hook pattern and how to buy it. So we're going to assume you've watched Eve and you were able to get into it just like she did, and now we're going to figure out what to do next.
hmm. Yeah.
But yeah, as you can see with eBay, right around $80 was that first touch to the 10-week moving average. So what I could notice on here when I was comparing it to CoreWeave, because that was the precedent Eve was using, and I was also using it too, but I was also using others, which we're going to talk about next. But the line here, the only difference I could see was that it never really started to roll over, even though it closed below that 1 week. And this is very special. I mean, I have not seen in my model book or found one yet that was able to do this and then go up another 60-70% from there. So this is very unusual. You can probably count 90% of the time, once it touches that first time, it's over.
Hmm. And I think last time you were on the show, you were pulling out because you did a deep dive on the 10-week moving average line, and you were
Yes.
pulling up some of the examples from Bill's Wednesday column where he was talking about, oh, when it's on low volume, even if you close below it, which both of these were on lower volume,
Right.
much lower than average, you know that might be able to be handled differently. And then there's also, of course, rules of where you are in the closing range. This was at 37, not quite the 40%, but pretty close. So yeah, there's a few elements that are kind of interesting about that one.
Yeah, that's really interesting, and I do use those hold rules on when I look at IPOs like this too. Even though it is a little bit different because they move a lot faster and a little more volatile, but I think those same hold rules would still apply. So, I'd like to think I would still be holding it in that situation. Okay, well let's go to the daily now, and we'll probably have to go back a little bit. So
Yeah,
let's go
let's
to
because it gets really, just so everyone knows,
yeah.
when you use an arithmetic chart, it gets really scrunched over here. So let's go ahead and change the date back to November.
1998. Yeah,
Yeah,
there you go.
so we'll go to the end
What a
of
great
November.
feature to be able to
Yeah,
go back in time.
yeah, and now it's not nearly as scrunched. I mean, it's still scrunched. Don't get me wrong.
Right.
In fact, if we went back actually to the beginning of the month, it would even, kind of change it a little bit in terms
Yeah,
of
that's good.
stretching
Let's
that out.
start with that.
Hmm.
So this is a great example of the hook pattern Eve talked about. It crossed over that 10-day moving average. Why don't you highlight, because I can't do it right. I can't show my
Crossed
computer.
over the
The
10
10
week moving
day,
average, the 10-day. Okay, yeah. So here's our 10-day, the pink right here, and this is where it crossed over it
right,
on the
exactly.
daily
So
chart.
Eve would probably be explaining, a hook pattern of something of this sort. But let's assume we're getting in somewhere in there or the next bar. And then
And
notice how even for
just
these
also one more thing, just
oh,
so
go
people
ahead.
know, in terms of the market, this was this was long-term capital management going belly up, and all of the stuff that was happening back then in 1998. And so once Greenspan, the Fed chair at the time, said, "Okay, we're going to do a bailout here." That we had a follow-through day in October. There was a follow-through day in September that didn't work, but then a follow-through day in October, and that's where Charles Schwab, eBay, AOL, a whole host of stocks were coming out. So that market component is in there as well.
Okay, so you can see there how it held the 10-day moving average as it clearly went from 40 to 80. So using this as an example for CoreWeave, like, okay, well, I'm not seeing a reason to sell,
Hmm.
right? I see a high flying stock like eBay. Okay, if I know I'm looking at a IPO today, I'm looking for, okay, is it going to break that 10-day moving average? I'm not going to sell at least until I have a break of that 10-day moving average. And I appreciate that you're here, you're going in time, go a little bit farther. Okay.
Those
And
are some big
even, okay,
gains.
great. I'm glad. Stop here. So 2 days before that big reversal bar, that probably scaring a bunch of people. And yeah, sure, it looks scary because it closed at bottom range. But again, it still doesn't touch the 10-day moving average. Now let's go to the weekly real quick just so we can see what it looks like on the weekly. Now this is already showing Friday, and I don't know if, when we stopped it on the daily, it probably wasn't Friday yet. So you can see on the weekly, and this is why it's important. On the weekly, we still end up top of the range, and a high flying stock is going to have those big reversal days. We don't even have a moving average line on here yet, so there's nothing to look at on the weekly. So, but I like waiting until Friday on these high flyers because what I'm looking for is a weekly bar that's going to be not closing in the top of the range. Notice how all these weekly bars are still closing in the top of their ranges.
Hmm.
Okay, let's go forward. Let's go ahead and stay on the.
Any offensive signals to you at this point?
No
Yeah.
offensive
Okay.
signals because all these blue weekly bars, all these
Hmm.
last five as it came out from 50 are all closing at the top of the range.
Hmm. Do you want to stay on the weekly or go back to the daily?
Yeah. Now stay on the weekly now. We'll
Okay.
keep going back and forth because
Okay.
and this is good practice. I would recommend, you do this at home with your stocks and you see what they're doing. Okay, so now we have an inside bar, but still contained. Now we're breaking out. Keep going. Keep going. Keep going. Okay. Now that bar right there, that's the one that we saw, right? That
Hmm.
closed in the bottom. There is where after 50 to there's where I would first be taking some profits off for me. Like
Yeah.
that's what I'm looking for because all these other ones, I'm holding the line. And Justin, what is that line? Is that the 10-week moving average already on there? Is that right?
The red line right here
Yeah,
is the
that's the
10-week
10 week.
moving average
Okay.
line. Yeah.
And then now let's go back to the daily because I want to show both sides. Okay, so we jumped a little ahead, obviously, but we did see a break of the 10-day moving average over here. But because on the weekly, okay, so right around 200, yeah, right there. Now, everyone has to figure out what their level of risk and tolerance is and what makes them feel good. I know Scott Sinclair always says, I got to take the gains. I can't
Got
help
to ring
it.
the cash
So
register.
he's probably ringing the cash register, right? But
He's
because of
ringing the
what I
cash
saw,
register all the way back here. So,
right. Okay. But for me, based on the weekly chart, okay, now go back to the weekly. And I'm sorry, this is what you got to do. You got to go back and forth right
yeah.
around that same area. The weekly bars still look fine to me, and I haven't had that touch. So I'm not ringing the cash register yet until, it actually broke where we stopped, where it broke. So, and it ends up being around the same spot. But again, you don't know, right? And it's still being offensive. I'm not giving that much back. And, I know I'm not going to top ticket. So hopefully that's helpful and that makes sense to people, kind of like what I'm looking for, because I want to maximize my gains based on this precedent. Okay, so any questions on this? Because
No,
then I want to
that's
go
great.
to Palantir. I'm
Okay.
going to jump to
So
Palantir.
I'm going to go ahead and go back to resetting today, and we'll put in
I'm going to give you a
Palantir.
lot of chart work practice
Hey, that's
today,
okay.
but you do it all the time, so you're a
Right.
pro.
And so,
Let's
just
go
as a
to,
reminder, Palantir came out here in
yes.
2020. Huge move here. So let's go back in time to 2020. And do you want to start on the weekly?
Yeah, let's go to October. I'm just guessing. Okay,
Okay.
yeah, keep going. Are
So
you
there's the
still
breakout.
in standard?
You know what? This is best fit now.
Yeah,
So
there we
this
go.
is standard now.
There we go. That looks better.
Yeah.
Okay,
um,
so first let me just share that I was buying it out of $10 when I had it. Yep. And again, weekly bars all closing in the top of the range. We can quickly go to the daily. Let's just so we can compare. Again, no touch of the 10-day moving average. Kind of came back to it. We'll assume that you bought it out of that base because that's what I did, but maybe you bought it even earlier potentially. And there's some reversal day bars there, but I'm not worried because again, what does the weekly chart look like?
mhm.
Yeah, right there. Thank you. And then I get so excited when I look at charts. Okay, and then these bars look great. So I'm
Mhm.
not even worried about the daily. Okay, let's keep going. Okay, then you got a really big one. Okay, now that could be concerning, but it's an inside bar, so I'm okay with that.
You did come down below the 10
Did
day
come to
moving
10
average
days.
line.
So again, risk level, maybe you consider selling some here, but because of the weekly
Hmm.
and what I'm looking for, and an inside bar within that bar, I'm still okay with. I'm still holding. Keep going. Maybe it's building a flag. Maybe I'm going to add more. Oh, now it's touching.
Oop,
Oop, a little bit too
it
far. We
jumped.
already know what's going to happen.
I ruined it.
No, it's okay.
Yeah.
Okay, but now we're touching, right? So now it's like, okay, it might be start to be over, right?
Hmm.
But I also have a base here. I think it might be a high type flag, so I'm probably gonna consider adding here, buying more.
With that first touch. Hmm.
Right, first touch, because again, maybe it could be like eBay, right? So keep going.
And I should mention, okay, if you bought this at 10 and this thing is
Yes,
now trading at almost 30,
yes,
this is this has become a larger part of your portfolio just by the capital
yes,
appreciation. So
yes.
when you're trimming some potentially, in some ways that's just kind of bringing it back down to like the level that it was, uh, when you bought it. Or
Right,
maybe not even that much. You still have an oversized position
right.
potentially. Or do you treat these as full positions, or as an IPO, are you usually kind of going in with a little bit less?
Well, I'm glad you asked that question because I didn't share this part yet. But with an IPO, I usually treat it as a half size position. So my normal full size position for a mature stock that's been around a while gets a full size. An IPO that's more volatile, I go half.
Hmm.
Okay, and when I'm trimming it, when I make that first trim, which I didn't answer that question or tell you the answer to that, but I'm taking out what I put in. So, and that's what I did with Core Weave, which I
Hmm.
didn't do for Palantir, because again, I've grown and I've learned, and that's what, so I improved upon it with Core Weave. So I was able to take out my initial position, and what I was leaving in was only the gains.
Yeah.
And so here, this weekly bar where it's closing in the bottom of the range or close to, let's see, what is the number there, Justin? Pull it up for us.
So
36%.
36.
So when I see, and I've seen a lot of weekly bars on this that close like this on an IPO, that this is where I'm taking my I'm taking that core position out. And
Hmm.
now at this point, I'm only going to be holding on to the remaining gains, and then I'll be trimming those accordingly.
Hmm.
So that's what I'm looking for. It's kind of like a doji bar, but it's pretty close to a doji. A doji bar is just a bar that closes halfway from the top to the bottom.
Hmm.
And when I've gone back to these other stocks, that's what I'm looking for. So the first one we looked at eBay was that first break of the 10-week moving average that I'm trimming, and I'm taking out that core. And then on Palantir on this weekly, so again, different kind of stock, I'm trimming in on the first weekly bar that ends the week in this indecision or bottom of the range.
And is the fact that this is kind of like a breakout with indecision an
I
additional
mean,
factor
I
there?
probably was adding to it, but then I would also have to be selling it at the end of
Yeah.
the week as well.
Right.
That part of the position.
Hmm.
And then a few weeks later, you've got the break. So now I'm scaling back. And
Hmm.
eventually, the only thing I have left is whatever the MCP stop number is. And then that's when I would get out of it completely.
Hmm. And again, that's on shares that are just kind of like a free trade for you at that point because you already took.
Yeah, exactly.
Yeah, you took it out already. So,
Right.
okay. Did you want to go through Twilio real quick, or
Yeah, let's go through Twilio.
okay?
So that makes sense, I hope, to
Yeah.
people.
Hmm. So Twilio, we're going to have to go back to 2016.
Wow, good
Let's
memory.
see. Um, and you know what? Let's go September. Do you want to go a little bit further back?
No, I think this is good.
Okay.
This is good.
So you've got your 10-week line.
Mm-hmm.
Hmm.
Got my 10-week moving average line already. And then notice that bottom of the range bar that has the 48% by it.
Hmm.
That's where I would start to get like, suspicious. Ending the week again at the bottom of that range. Now in this case, it still went up just a little bit more, but then we kind of already gave it away. But let's go to the daily real quick just so we can see again what's happening. So in this case, this stock started to move and then it built its first base right around that 10-day moving average.
Hmm.
So that would be, a normal entry. This one wasn't as high a flyer as the other ones that we looked at, obviously, but still, it's a rare jewel. It still made that 100%. And actually, in this case, that's where it really started to have trouble, was right around that 100% area.
Hmm.
But the 10-day moving average, and then it came right back to it. So when it's touching the 10 and the 21, to me that's like it doesn't know, doesn't know what it wants to do. And at this point I know it's not going to be like an eBay or a CoreWeave or a Palantir when I see stuff like that. I do think usually when I see patterns like this where it comes up and it's still holding the 21, that usually there's an opportunity for a little bit more, which in this case it did, and then it comes down. So you can see here, I'm kind of just talking in generalities, but I don't really have these things written down. I mean, I have them written down in my notes with this
Yeah.
model book, and I'll be writing like, okay, made a new high, came back to the 10, kind of stayed between the 20. Like I'm writing these words out and then I'm getting used to seeing it. And then that's what I'm looking for. So it's not something that I program. It's just something that I'm seeing and I'm writing down and I'm taking notes so that I
Well, and that's the
know
benefit of
what to look
your
for.
electronic chart book, right? Is by
Exactly.
going through that process, taking the notes, your brain starts kind of committing the pattern to memory, and so then you have like, oh, is this fitting the pattern or isn't it? Kind of
Exactly.
thing. So, do you want to do Corsair real quick?
Yeah, let's do Corsair. And the reason why I want to do this one too is because it was a rare jewel that never really came back. So actually pull up the monthly real quick and I'm sorry, yeah, go out
How
a
far?
little bit just so we can show people. So and it's yeah, it never really came back. But this was a so, and the point here is not all rare jewels are going to come back,
Hmm.
right? 10% of stocks approximately will have their biggest run right after the IPO and then never amount to much of anything.
Hmm. And
And
this was
that's
a
what,
tough environment for the IPOs because 2022 was just, you had all the SPACs, all the IPOs, huge number that came out in
right,
2021, and you really kind of figured out, okay, who's 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 who, in terms of strength, because a lot of these IPOs, I mean, we don't even talk about them anymore.
right, exactly.
Hmm.
But it was one that still achieved the criteria for a rare jewel. And so therefore it went into my model book. And I had
Hmm.
even forgotten about it. And I was looking, I was like, Corsair, is it still around?
Right, right,
And it
exactly.
is,
Yeah.
obviously, because we're
Uh-huh.
looking at it.
Hmm.
But I didn't even know it was still around because I hadn't heard about it in so long. But
Hmm.
anyway, so you've got, we don't even need to change the chart here. I think just go to that.
Oh,
Oh,
sorry.
you did change it.
Yeah, well, I was a little bit too fast. Okay,
That's
so there we
okay.
go.
Okay, now that you were, yeah, right there. So look at that big bar at the top where it reversed down. Yeah, right
So
there.
reversal
That's
here, reversal
exactly
here, reversal
right.
here, reversal here. Which reversal do you want? Pick your
I
reversal.
want the
Any
first
reversal.
one, the
Right.
very first one.
Uh-huh.
That one right there. That's the sign that, okay, time to trim for me.
Mhm.
Right. This is what I'm sharing with you guys. Look at these IPO advanced phase initial runs and look for those reversal bars on the weekly, not the daily, right? The daily is going to get you out sooner because it's going to scare you. At least it scares me. So I use
And
the
just to be clear,
weekly.
sometimes there were a few of these like this week right here. It was a
Mm-hmm.
reversal on an inside week.
Mm-hmm.
Is that something that's not as concerning for you? Is it really, oh, you made all this progress and
Well, that's
just
in the base,
yes,
right?
right.
So
Mm-hmm.
I'm negating stuff like in the base. That's the base, right? It's
Mm-hmm.
like once it like starts that run.
Yes.
And
Mm-hmm.
that red bar right after the breakout, that's not really an inside week, but it's just getting started.
Yeah.
So you literally have to think about it and it's like, okay, it can't just be any reversal bar. It's got to be a reversal bar after it's made a lot of progress.
After, yes. And that goes back to your bullet point on the, oh, what does it look like after a 100%
Yes.
gain?
What does
Yes.
it look
Which you
like?
said we'll find that out when we get to the charts. So
Exactly.
you
So
kept your
now let's
promise.
go to core weave.
Okay. And do you want me to just go to today
Yeah,
for
just
this
go
one?
to today because it's still on there.
Mm-hmm.
Okay, great. So how many weekly bars do we have from the breakout? Let's say one, two, three, four, five. The fifth one,
Mm-hmm.
your top hash mark. Let's focus on that one.
Mm-hmm.
That one, yeah. You're gonna clear it out right there. That's where I was selling my first bit and taking out that core position. It was right there because I didn't include that blue
Right
one.
at the 50% range.
Yeah, right there because that was 50 and it was a really big bar too because you noticed a lot of them were like big bars. I can't tell you what the percentages are. Again, this is all just by like sight and experience.
Mm-hmm.
And I was actually predicting on this one, I know we're not supposed to predict, but in my head, I was actually predicting 400%
Mm-hmm.
based on Palantir,
Right.
actually, not eBay. And sure enough, that week was right 140 from 40. Now I was calculating from 140, and it already hit 160, and then it came back and ended around 140. So again, like studying these charts and going back in time and looking at them, I hope that for people that do this, they'll be able to predict these things too. Oh, well, I see this, whatever. And then when you're right, you're going to be like, okay, I did my homework. It's not a fluke, and these things will start to come to you. So that's what I really hope for everybody in showing you this.
Mm-hmm. Um, so just real quick, since we're here, circle. What can you kind of tell us about this? Because this was another one that a lot of people were interested in. Um, it seems like just as soon as it started getting, its, advance and its run, it had this really ugly week here.
Yeah, right. Go to the daily on this one. This one was different. And the reason why it was different was because, well, it didn't have that hook pattern for one. It made a little bit of a gain, show right where that it says IPO 31,
Mm-hmm.
where it kind of consolidated right there. Yeah, so I wasn't getting into it until there. And even the 10-day moving average didn't show up until after that. So you didn't even have really a 10-day moving average as a guide, but you had that consolidation that you could have bought it from. And in this case, we didn't have as big a gain. We had the 100%, but not as much as CoreWeave. So in this instance, I was using simply the MCP 50, the mental cap. I was just wanted to retain 50% of my gains from that initial consolidation that we just highlighted
Mm-hmm.
because I really didn't have enough bars. And that weekly bar that you said that you showed that was so negative. Let's see, did I calculate? It was 209. Where was 209?
So 209 is
Yeah. Yeah,
probably.
right there.
Yeah.
So go to the weekly, actually, Justin, real quick. That bar right there. Yeah. So I was selling it before the end of that bar
Hmm.
because I wanted to retain at least 50% of my gains. So in this
So
instance,
that trumped your wait
ex-
until the end of the week rule because.
exactly.
Hmm.
Yep.
Yeah.
And in this case, because I didn't have as much of a cushion, you didn't, I mean, and that's compared to the other examples we've already looked at, Palantir and,
Hmm.
eBay. We had two big weekly bars and then it already reversed. So that already was the signal like, okay, this one's not going to be like the other ones.
Hmm. So one more chart that I want to throw your way because this is something that was coming up with a lot of people on IBD Live. People were saying we got to look at this Figma because as this was kind of coming out, a lot of people were saying, "Hey, is this a hook pattern right here? Did this kind of fit the bill for a hook pattern?"
Well, okay, so we don't have a 10-day moving average yet. Go ahead and bring it live to today, Justin. Let's see where.
Well, then that lets you know what's
Well, okay, all
happening.
right. Don't do that then. But we don't have a 10-day moving average yet line yet,
Yeah.
right?
Um,
Because one
for
thing
the
I do
weekly.
like to do, no,
Yeah. Or
is
for
is
the
wait for that 10-day moving average.
yeah. So
So
you
that
didn't get
hook
it
was right
until
there.
yeah,
Yep.
yeah, until it started breaking down, and you're like, oh, that's not a hook. That's a hook, line, and sinker.
Yeah, exactly. So, okay, but this is a great question. So that blue bar that you were showing right
Hmm.
before the red bar that you showed, okay. One thing I like to do, and this is not based on anything. This is just based on my experience and looking at a lot of charts and trying to develop rules based on the charts. So I saw that daily blue bar and I said, okay, maybe, but I
Hmm.
want to see follow through.
Yeah.
The next day, there was no follow through. But I
Hmm.
still had two bars. I had a 2-day resistance
Yeah.
of kind of a hook.
Right.
So if it had gone up the next day above those two bars, whatever
Hmm.
price that is, I would have tried it as a
Yeah.
hook. But
Hmm.
because it didn't follow through after on the third day, I wasn't going to be in. And I treated CoreWeave actually very similarly. And a lot of these IPO bases, that's what I like to look for. So I don't just buy it on the first bar. I gotta wait for at least the 2 second or third bar and see how it responds to that previous resistance. And if I have a 10-day moving average that's aligned with that, that makes it a little bit easier. But when you don't have a 10-day moving average, I really like to see some kind of level, even if it's two bars.
Yeah. And I mean, here again, it's your rules kept you out of trouble in this
Exactly.
case. So they hopefully get you into the winners and keep you away from the ones that are ones you should stay away from.
Yeah. Great
Since
question.
since we know that you've got the position in Nvidia and it's Nvidia earnings, I just want to end the show with kind of your take on Nvidia. A lot of folks, are kind of it's earnings day for Nvidia. I'm showing that it's down about 2.7% right now in after hours. Still look, it's still doing really well. I think it was like 50% on the revenue side, 57% or something like that growth. So still very solid numbers. But when you've got the cushion that you have on this one, do you even care about earnings so much, or
Of
is this
course I
kind of a
care.
non-event?
Absolutely. Well, go to the weekly
Hmm.
for me and let's see where is the 10-day moving average.
Right here.
Yeah, so what's the number?
Oh, what the number is? Okay, so
What's
let
the
me
dollar amount?
10-week moving average is at 172.44.
Okay, so 172.44. I'm not on any stock reporting earnings, even if it's not Nvidia. Like, okay, I make a note. Where's the 10-day moving average? And if it comes back to that, like I'm totally okay with that.
Hmm.
Now, this one that is has I do have a big cushion, as you pointed out. I did calculate for the audience what is my current MCP 50, right? 50% retention of gains, and it's actually right around 100.
Okay.
So, from that standpoint, I have plenty of room.
Hmm.
And you can see it's also right in line with that previous base back from 2024, and we had some of the lows from those other bases kind of cross over. So that would seem, if there's something really traumatic going on with Nvidia or the market, that it could potentially come down to. So that would give me the flexibility to at least hold it to there and then and make some other concerted decisions. But for earnings today, if it holds a 10-week moving average, I mean, this is a non-event. What
Hmm.
I would need to consider is what I want to add to it if it breaks out of this pullback.
Hmm. Do you ever look at the relative strength line and say, oh, this is not, because I mean, it went through this long period of where it was kind of a market performer, right? It was,
Hmm.
um, just not outperforming the market. Does that ever give you cause for concern, or like, oh, maybe I need to, change my mental capital preservation rule because there's faster or better things out there?
Yeah, that's a great question. But the answer is no.
Hmm.
And the reason why is because once you achieve, I guess, 10 bagger status, I mean, obviously on the downside, it comes down just as much as it goes up on the upside. But
And sometimes quicker.
yeah, and sometimes quicker. But
Hmm.
I've just noticed that even if it's a slower performer, it just really doesn't matter to me because when I see what the overall is, like it's just a night and day experience. Like I would never hold a 20% stock for that,
Right.
of course,
And
but
the compounding, I mean,
yeah,
that's
and the
just a
compounding is
huge,
just
huge part of
right.
it. Yeah.
And
So,
it is one thing that I'm considering over time. Like, Nvidia is my model book 10 bagger. And
hmm.
so as I look forward to other stocks that I have accumulated 100% plus gains in, I'm trying to fit them into the model, and then what are these rules that I'm going to be using for the future for these other ones. And
Hmm.
there is trimming on the way up, which is not normal for me, but will now that will be included. And then of course the mental capital preservation will all play into that as well. So it's been a journey, and it's been a lot of fun moving into like just this new phase, I guess,
Hmm.
of my trading. I've been doing it for, I don't know, gosh, 20, 10, 15, maybe 20 years
Yeah.
now, and just how I've evolved as a trader and been able to achieve these milestones, and then again, still keeping it exciting and fun for myself. So
Well,
I
that's what I
just,
was going to say is
yeah,
you aren't resting on your laurels. You're not like, oh, look at me, I got the 10 bagger. You're like, okay, how can I get the next one? What can I do
yeah.
to identify? And, as you said, okay, I played this with Palantir and I played it a little differently with CoreWeave. So you're still trying to get better each and every year. So that's awesome, Kathy. And
Thanks.
uh, yeah, that's something that I think we can all learn from. So thank you very much for sharing. Again, hopefully this is something that helps, especially as we get more IPOs. Uh, Helps people get into the ones that they should be in and stay away from the ones that you shouldn't, and hopefully know how to handle it, because that's the tricky part. It's always easy to see what happens after the fact and say, oh, this is what I should have done, but doing it in real time is a whole different story. But that's where rules come in, right?
That's exactly right. And just the experience and just looking at, like I said, letting this chart speak to you. Yeah, I can't stress that enough. I mean, and I hope people understood what we were trying to do today. I know it was a little chart intensive, and maybe they weren't seeing what we were seeing. But my hope for you is that if you look at enough charts and then you do what I we were trying to explain, it will jump out at you, and then you'll be able to create your own rules, and then really build that confidence in yourself that, hey, yeah, I can see this now, and I can do that too.
Awesome. Well, thanks again for being on the show, Kathy. Always appreciate it.
Thank you.
That's going to wrap it up for us this week. Thank you so much for joining us. And don't forget, next week we've got Mark Ritchie II coming back onto the show. He, of course, is one of the contributors to the Momentum Masters, along with Mark Minervini and David Ryan in there. So that's a great book. And he works with Minervini very closely with his Minervini private access. So hope you join us for that. It's always a great time with Mark as he shares his knowledge and the things he's looking at. So hope you join us. We'll be right back here on Wednesday, live at 5. See you then. Bye now.